All right, let's dive right in. Today, we're going to put on our detective hats and investigate one of the biggest names out there, Amazon. Something's been going on with their stock, and we're here to figure out what the real story is behind the numbers.
So here's the central mystery. Amazon stock? It's been falling. And that's got everyone asking the big question. Is this just a little pullback, a buying opportunity? Or is it a red flag for something more serious? Well, that's what we're here to do. Sift through all the clues and get to the bottom of it.
Okay, so our investigation starts right here with what you might call the scene of the crime. We're looking at a pretty clear 3-month downtrend. This is the mystery we've got to solve. Let's rewind the tape a bit. Back in July, things were looking great. The stock peaked, but then it started this slide. August got a little choppy, some volatility, but the path was still clearly down. September was more of a slow, gradual bleed, and that brings us to today, where it's hovering around $219.51. And believe me, that price is super important. In any investigation like this, you always start with the basics, right? The fingerprints, the footprints. For stocks, that means price and volume. These two things tell you pretty much everything you need to know about who's winning the fight, the buyers or the sellers.
The best way to think about this is like a giant tug of war. You've got the sellers on one side, we call that distribution, and they are pulling with all their might to drag that price down. On the other side, you've got the buyers. That's accumulation, and they're digging in, trying to create a solid floor. And the volume? Well, that tells you just how intense the struggle is and which side is pulling harder.
So, what's the verdict from this first clue? Well, the evidence is pretty clear. The sellers have definitely been in control. There's been this persistent selling pressure. But, and this is a really key point, it hasn't been a stampede for the exits. The volume isn't screaming panic. It's more of an orderly, controlled decline. That's an important distinction.
Okay, so we've got the basic story down. Now it's time to bring out the big guns, the real forensic tools. We're going to dive into some expert technical analysis to get a much deeper understanding of what's really happening under the surface.
First up in our toolkit are moving averages. Now, don't let the name scare you. All they do is smooth out all the chaotic day-to-day price jumps and drops. It's kind of like calculating a car's average speed on a long trip. It just shows you the overall direction.
So, when we look at the numbers for Amazon, what do we see? The current price is trading below its short-term averages, the 5-day and the 20-day. That's clue number one, and it's definitely a bearish sign. But here's where it gets interesting. Look at that 200-day average. The price is still above it. And that 200-day? That's a big one. It often acts like a huge line in the sand where buyers tend to show up.
Next tool, the Relative Strength Index, or RSI. This one is all about momentum. It basically measures how fast and how hard the price has been moving to see if things are getting a little too crazy on the buy side or the sell side.
And Amazon's RSI is clocking in at 41.56. So what does that mean? Well, the scale goes from 0 to 100. Anything below 30 is oversold, and above 70 is overbought. So at 41, we're definitely in weak territory, leaning bearish for sure, but it's not at a panic level yet, not even close.
But hold on, just when it seems like all the evidence is pointing in one direction, we find a twist. There's another clue that suggests this stock might be like a rubber band that's been stretched way, way too far.
And that clue is something called the CCI indicator. Look at that number, minus 69.69. Now, I'm not going to bore you with the math, but what you need to know is that a number that low is pretty extreme. It often hints that the selling has gone too far, too fast, and that a bounce could be just around the corner. So this is the first real piece of evidence that goes against the main story.
But as interesting as that one clue is, you can't ignore the mountain of other evidence. And folks, the weight of the evidence is still pointing down. We've got the MACD, the Arun indicator, OBV, the Chaikin oscillator, the whole gang is here, and they're all singing the same tune. Negative momentum, strong downtrend, and yep, money is heading for the door.
So where does this all lead? With all this conflicting evidence, where is the fight actually going to happen? Well, that brings us to what I like to call the battlegrounds, the specific price levels where the buyers and sellers are digging their trenches.
And it's a pretty simple concept. You've got resistance, which is like a ceiling. Every time the price tries to punch through it, sellers smack it back down. And then you have support, which is the floor. If the price falls to that level, buyers tend to rush in and prop it up.
And for Amazon, these aren't just abstract ideas. We have the exact coordinates for these battle lines. The ceiling, the wall of sellers, is pretty solid right around the $222 mark. And the floor, the first line of defense for the buyers, is sitting at 217.89. And there are even more reinforcements for the buyers just a little bit lower. And this, right here, is the crucial moment. The price right now, it's literally hovering just above that first support floor. It's teetering on the edge. Seriously, what happens right here could decide the stock's fate for the next few weeks or even months.
So, it's time for the final verdict. We've gathered all the evidence, we've looked at all the clues, and our investigation leads us to 3 possible scenarios, 3 potential futures for Amazon.
Scenario 1. The bulls take charge. The buyers see that stretched rubber band, they see the support level, and they say, not today. They defend that floor at $217.89. That could spark a nice bounce, sending the price right back up to test that resistance ceiling at $222. And if they can smash through that, we could easily see a run back to $225.
Scenario 2. The bears win the day. The sellers just keep on pushing. They break right through that floor at $217.89. A break like that often triggers a wave of new selling, and the next stop would likely be that stronger support down around $214. If things get really ugly, we could even see a drop towards $210.
And then there's scenario 3, the stalemate. The tug of war just keeps going. Neither side can get the upper hand. The stock gets trapped in a range, just chopping back and forth between that floor around 217 and the ceiling around 222. A whole lot of action, but ultimately it goes nowhere.
So let's wrap up this investigation. What's the final report? The stock is undeniably in a short-term downtrend, no question about it. But some of those clues are hinting that it's stretched pretty thin, and it might be due for a bounce. It all comes down to this. The stock is at a critical support level, and it's decision time for the buyers.
And that's the big cliffhanger, isn't it? Amazon is truly at a critical crossroads. We've laid out all the evidence. So, what's it going to be? Will the buyers make a stand and defend the floor? Or will the sellers finally deliver the knockout blow and push it to a new low? The next chapter of this story is about to be written.